When Real Money contributor Roger Arnold asked the provocative question, is Bank of America on life support? He ignited a bit of a firestorm. Roger joins me now from our offices in D.C. Nice to see you, and perhaps we should start with you explaining your premise about B of A. What's your primary concern? You had recently written the bank probably wouldn't survive another global recession.
Yes, Rhonda, and by the way, it's nice to see you too. That did seem to cause quite a firestorm, and I'm still trying to respond to a lot of the emails. The basis of the article, the basis of the column, and it was really a short form column, was that Bank of America right now, and for the past 7 years, really ever since the immediately post-Lehman era crisis began, has principally been augmenting its business by decreasing its labor force and increasing its revenue by way of what I referred to in the article as purchasing revenue by way of offering very low interest rate loans on commercial and industrial loans. That, however, is not really a business strategy, and what they are now facing is the prospect of continuing this into what I believe is going to be a global recession.
So let's backtrack just a moment. How have some of the other big money center banks managed to reinvent themselves, and why does Bank of America really stand apart from them?
The bottom line is Morgan has diversified its business. It is clearly the most diversified of the four money centers that are U.S. based. Wells Fargo is beginning to diversify its business as well. And when I say its business, I'm really referring to the loan making side of banking. Citigroup is now focusing its a business on retaking the international business it lost to HSBC, HSBC being the other large non-U.S. based but international lender. In the international banking business, there's really HSBC and Citigroup. The issue with all of this, though, Rhonda, is that it leaves Bank of America without a growth business strategy. And what it looks like to me, and this is not based on some speculative interpretation of mine, this is based on the bank's call report data. What it reports to its regulators, in this case, the Federal Reserve, every quarter as to what the status of the bank is, where its loans are, how many are non-performing, these sorts of issues. That data is very clear that Bank of America does not have a growth strategy. And it appears right now that JPMorgan and Wells Fargo are dividing up the domestic U.S. Banking industry, at least the segments that require a money center, amongst themselves, and leaving Bank of America really with little room to go.
So let me play devil's advocate just for a moment. Some shareholders obviously like to see cost cutting. You could argue, well, Bank of America was trying to hunker down and it cut costs really down to the bone. And if you look at their last earnings report in January, CEO Brian Moynihan was basically saying the bank is on track. Is it possible that after all this cost cutting, Bank of America could just say, all right, here's our strategy. Now we're going after that certain line of business, or is it too late?
No, it's clearly not too late. And let me tell you right now, I have no agenda here. I don't want Bank of America to fail. I got my start at Merrill Lynch several years, 25 years ago or so. And I've done business with the Bank of America and Merrill Lynch investment bankers on large multi-billion-dollar projects in the past. I have a great deal of respect for the people. So there's no agenda driven here. I don't want the bank to go out of business. I would love to be wrong about all of this. The problem is when you're looking at the bank call report data, arm's length, third party, and just trying to figure out where it's going, because they're not going to tell us specifically, it's very clear what their decisions have been, Rhonda. And they clearly have the opportunity to shift gears, go into a growth strategy. I was interviewed about this sometime in January for another publication up in New York. And it was clear that the commercial mortgage business that Bank of America has in New York City has grown quite a bit, 300% or so over the course of the past a year. That may be their direction. Maybe they're now moving into the commercial end of banking in getting out of the retail side somewhat. We're going to wait to see. Having said that, there's an old saying that you've got to prove it to me first. It's not up to me as an analyst to assume, business is going up in New York on the commercial side, so this is what Moynihan's business is going to be. This is what their growth strategy is going to be. They have to prove it. And so far, they haven't proved that that's going to be the long-term strategy or whatever their long-term strategy is going to be. The issue, coming back to the article, however, that I wrote that caused all the firestorm, is that the time to prepare for this is not now that a global recession is. A lot of people are saying there is no global recession. I'm pretty sure that we are headed towards a global recession that's going to cause major problems for all four of the money centers. But of those four in the U.S., it's going to cause the biggest ones for B of A or Bank of America because they're not prepared for it.
And that is where we're going to end it. Roger Arnold, you've prepared us for what's next. Thanks so much.
Absolutely.
I'm Rhonda Schaffler for The Street.